Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see you. Welcome to a very interesting start to the morning with the CPI. A lot of volatility. I won't kid y'all. I'm ready for a nap, but it was a profitable morning, if not one that definitely tested our discipline and tested our process in a way that we've got to stay with our plans to control risk. And I am out of this trade, but I'm happy to walk through a little bit of this morning. So like we did last Friday, we traded another pre-market hot zone. So this is very much a futures trade. This is very much a trade where you could trade micros or minis in the ES and the NQ. That's typically going to be my approach. And you know what? Let me share with y'all what I shared with the members this morning. We went through our process to determine what our directional bias would be. And I was mildly bullish because we were above some key levels. So nonetheless, we bracketed the morning, which is to say we saw the initial volatility and then we basically put in our orders. Now, interestingly enough, I'm kind of bummed because the short side would have been great. The soonest I could have taken a limit order to sell on ES would have been 48.39. And this was based on the hourly price movement ranges. Really, what's interesting is the hourly price movement ranges were just 2 points short of getting us short, which actually would have been really nice. On the NQ, and it was a wild wick. It was a wild wick. Yeah, and if you notice here, we were 1.5 points shy. That's how incredibly accurate these hourly price movement ranges are, even in front of a massively volatile, impactful, macroeconomically powerful event. Gosh, it would have been nice to have the short, but again, this is 1.5 points shy of my 1759. Now, okay, Rog, what did you do? We ended up getting our long positions, and I ended up getting all three scaling in to NQ and ES on the long position, and realizing that there's a lot of volatility here, a lot of bearishness. We went ahead at 936, scaled out at an optional, moved to break even, and trade is done. I tell you, even though being above the previous session close, being above some key levels, I was mildly bullish. When we have a neutral environment in front of the hot zone, we've got to be open to either side. And you'll see some of the notes here on bracketing. If you never thought about bracketing before, bracketing orders lets me take a neutral environment and say, look, I've got to be open to the long or short side, regardless of my directional bias preference. At the end of the day, we trade what we see, not what we think. And when I look back at this now that I'm flat and my heart rate's back down to normal, and yes, gang, I don't know how many of you think that professional or full-time traders are somehow just money numb. We are not. I am never going to be money numb because I'm always going to calibrate to what could happen if everything goes wrong. If I'm wrong, how much is it going to cost me? And this could have been a wild one. That said, I look back now and say, gosh, but for a couple of points, this could have been a monster short. It ended up being a reasonable long position, but for a couple of points, it could have been a monster short, and a huge nod to the HPMRs that show where that resistance was. We just were barely shy of that. So that's what I've got going on this morning. And, I was telling my traders in the mastery as we're wrapping up that trade saying, hey, look, I'm glad we were able to scale out, pay ourselves a little bit. And I wish we were able to get short. Okay. All right. So with that being said, what happened? I know a lot of you might be asking, okay, Rog, what on earth happened with that CPI? Why so much volatility? And really, there's going to be two reactions to something like CPI. The first reaction is the number itself, which I'll be frank, I didn't even look at. So CPI, you notice I haven't even refreshed this. Let's take a look. What did CPI come in at? And remember, it's not a play on this number, it's a play on the price action. Whoa, there you go. It's just slightly hotter than expected. The previous was 0.1. The forecast is 0.2. We got 0.3. Not good, not bullish. Why? Hotter CPI is bearish for the second reason. So this is two things. One, we see the reaction to the number, okay? And two, we then know, because this is a macroeconomically important release, it's an inflation hot zone. We then say, oh, wait a minute. Are rate cut expectations falling? And yes, why, yes, they are. So the more hyper, that kind of exaggerated move to the downside isn't just because we ticked up a little bit higher on CPI. The way the dominoes fall is now we have this macro reaction. Macroeconomic, what does that mean? For our purposes, looking at US data, it's what the central bank is looking at, and they have a dual mandate, jobs and inflation. So if inflation's ticking higher, are we going to have super high expectations for a rate cut, which is this column right here? I do want to remind everybody that this is still the most likely outcome of the March 20 meeting. And by the way, Rob, what about January? January is a hold. It has been a hold. There's no expectation for a January shift in monetary policy. No cut, no hike, no nothing. Just unchanged. This column here is the hold column. And if we're expecting a hold based on this data, when all along expectations were for March to be a cut, equities have to respond. Now, as the dust settles, are we seeing a probable hold? No, it's just more possible. So it's a matter of degrees. I'm just going to refresh this and see if it's changed any more than it has. And survey says, go to March. That's January. Don't worry. That's okay. No. In fact, the rate cut expectations ticked back up just a little bit, about a 1.5, maybe 2 percentage points. This is not a no on the rate cuts. It's just not as big a yes as it was. So we're going to take each month as it comes. Now, I'm not going to look forward to December. I'm not going to say what this implies for later on in the year. Let's just focus on the first rate cut meeting that's been discounted, and that means most of this action is in March, right? So if you're wondering, yeah, Rog, why all that bearishness? Why that second leg moving lower? Why that second leg moving lower on the indices? Because the data was a little higher. That's the first sell-off. And then the macro change. That's the second sort of leg of the sell-off. So remember, again, there's a lot of folks that are going to start prognosticating about this, that, and the other thing. I'm never going to guess. I can't see the future. But I will tell you this. Expectations for a rate cut, as they sit right now, are still 63.9% for a cut, but a rising 35.8% for the hold, which is more probable, the taller column. All right. So please remember, a lot of folks like to run their mouths off when it comes to the reaction to this data. March 20 is still really far away. All right. And so right now, this is the immediate impact. And we'll see how this ends. We might find equities say, you know what? Let's not worry about it. A delayed cut is still a cut. It's still going to be a dovish year for the Federal Reserve. It's still going to be something where we may not see the cut in March, but could we see it in May or June? We'll just take the data as it comes. We'll trade what we see, not what we think. So there we go. That was the morning, and tell you, it was a wild one. And like I said, that short would have been glorious. We end up with a buy and a win, and now we're flat. All right. As always, gang, if you have any questions, feel free to type them in. Phone lines are open for your requests. So let's jump on into your questions. So CPI, hopefully that makes sense. And then if there are going to be any swings, if there is going to be a response we see after the bell, I would imagine it's going to be largely bearish, which let's adjust our view for a moment. And adjusting your view can be as easy as changing the time frame you're looking at and looking at the zones for today. And the zones for today would tell me that if we can get a pullback, if we get some more weakness today, I'd love to be a buyer. We have largely an overall uptrend on the hourly. We have definitely an uptrend on the daily. So what we want to remember is that short-term volatility is its own little world. This is not multiple time frame confirmation. Short-term volatility is a 5-minute slice of psychology. The hourly is an hourly slice of psychology, and the daily is obviously an entire session, a daily slice of psychology. They don't need to be in agreement. They do not. We're, in fact, likely to open up bearish on the Russell, bearish on the ES, and bearish on the NAS. So what was neutral pre-market is now kind of bearish as we start our 5-minute slice of psychology on the open. All right. So we'll see if we get that bearish echo at 9:30 here in about 17 minutes. All right. So that's what I'm looking at here. Depeche asks, all right, so if we're looking at the ES, remember again, we always want to think symbol and time frame, because if someone were to ask me, ES, Rog, what's your plan with the ES this morning? 5-minute slice of psychology. I'm going to be bearish. I'm going to have to look for either long puts in the SPY or shorts in the ES futures. But if we get a lot of weakness, which I'm kind of hoping we do, if we get a lot more weakness to the downside, I'd like to be a buyer. Buy the dip is still very much in effect on the daily time frame, and even arguably on the 1 hour as well. So it depends, Depeche, on what it is I'm wanting to do. Now, if I want it short, as you mentioned, 5-minute time frame, hourly price movement range, which, by the way, gang, tomorrow is the last day for the sale. So if you've been wanting to pick up the hourly price movement ranges, which, by the way, that was the reason for today's win. Okay, I used hourly price movement ranges exclusively for the zone to enter in, and that was still a reasonably good trade. Again, I would have loved the shorts, but the hourly price movement range resistance was right there. I mean, but for just a tiny move higher, we'd be short on that hot zone, which really we're just all over the place. So I'm happy with that trade. But if you've been wanting to get the daily price movement ranges, which is what I'm going to use for the swings, overnight exposure, trend following these indices, or whether or not it's going to be a day trade, hourly price movement ranges, check them out. They are still absolutely on sale. If you're gonna use them, gang, buy them on sale. All right. So let's move on down to, so dimed out. ES and SPX are the same conversation, because what I have here in the ES is a nearly 24-hour look at the S&P. SPX is a little different of view, right? It's more that 9:30 to 4. So anything I do on the ES is going to be valid for the SPX after 9:30. Is today going to be a pullback day? I'll never prognosticate on what's going to happen, but here's what I can tell you. Dimed out. Let's pull up the SPX with the daily price movement range. If I want to be a pullback buyer, I'm going to be a pullback buyer based on what? The 1 hour or the daily. And if we get weakness, absolutely, I want to take advantage of that. I'm going to keep an eye on those gray zones, and I'm going to look to be a buyer of SPY calls. Could be SPX calls. It could be the long position in the futures, but that is what I would take advantage of. All right. So thank you for that. What else do we have here? Steve asks from our Simpler Essentials room. Steve asks, do I feel like the Fed's decisions correlate with the Fed Watch tool? So Steve, I feel is a funny word. I never try to feel anything. Have I observed? Do I see that? Yes, absolutely. I will not hedge that at all. Absolutely. But remember, the Fed Watch tool is based on something called the Fed Fund futures. And much like I would trade bond futures, crude oil futures, or S&P futures, they're always going to be traded. Therefore, the opinion and the target rate probability, which is the outcome of those futures contracts being traded. Yes, I do absolutely have observed for many, many, many years that the Fed decision and how they message is absolutely acknowledging what those target rate probabilities are. 100%. Yes, Steve. And by the way, the example I like to bring up is when Jerome Powell ignored target rate probabilities, ignored expectations in Q4 of 2018. And that lesson was a harsh one for the then new Fed Chair, Jerome Powell. And I do not believe he will defy target rate probabilities without messaging that they are not in sync with what they're going to do. So if the Federal Reserve wants to prepare us for a potential hold in March, the messaging from here forward is going to shift whenever we have an FOMC member speaking, including, of course, Jerome. So great question. Thanks so much, Steve. Let's see. Next up is how about a long, hey there, David. What about Netflix? Sure. Let's go take a look at NFLX. And how about a long in Netflix? Double green. I love it, David. I need a daily price movement range. The wave would be fine too. In fact, I'll tell you, daily price movement range has been in effect since the 4th, long position, nice trade. Since the 8th, again, long position, good trade. And then I need the wick to touch that gray zone again. I need the wick, the candle, to touch the gray zone, and that will trigger the buy. So I'm with you. Let's try to find a pullback that we can get opportunistic on. Microsoft, Fernando. Microsoft's been in fuego. Microsoft 100% did its own thing. Yesterday in the master, had a number of traders say, Rod, can we buy Microsoft? The visit to the hourly price movement range zone was so brief. Even if I had it on my radar, which, all my cards on the table, I did not, because the XLK and the NASDAQ were very wishy-washy. The Microsoft move just was its own thing, which I tried to avoid trading outlier stocks in either direction. I like more of that unity, that cohesion between index, sector, and stock. But nonetheless, would we want to be a buyer in Microsoft? Absolutely. And I would like to see NASDAQ and XLK, that sector, in agreement. But as far as a weekly goes, this would be daily, Fernando, not weekly. We're just not low enough for a weekly position. I'll give you an example, Fernando, of what kind of timing I would use. It's going to be a weekly time frame, like you mentioned. And we do have a long-term weekly already open. We have for over 16 months now. And that was actually built back in October of 2022. So when we talk about weekly, gang, this is not a trading time frame. It really cracks me up when people use weeklies and monthlies to talk about what might happen in the next couple of days. No, just no. That is a far larger time horizon and a powerful one, because here's an XLK position that was built at 122. Weeklies are far less frequent. The moves are far, far bigger. So no, not now. Maybe if we trade back down to 175, can I find another weekly opportunity? All right, Eddie asks, do I start with a lower time frame on a trade than depending on price? No, that's multiple time frame confirmation. Negative, Eddie. I will go on the record here. It does not work. It does not work. I know it sounds great. Please remember, let's go back to what's happening right now. I don't have to give you a for instance. I'll show you right now. NASDAQ, S&P, they are very bullish. That is buy the dip on the daily. When I look at the psychology of session by session, not minute by minute or hour by hour, if I look at session by session, the overall direction has been buy the dip. Hence, I'm not going to short based on what I see on the daily, right? Now, if I look at the 5 minute, then this, then this, then this, I do not believe multiple time frame confirmation works. I abandoned that long ago. We're all taught it very early on. I do not believe it's something that is as effective as looking at the structure of the time frame, realizing that a weekly versus daily versus hourly versus 5 has not only a different view of psychology, but also a different time horizon. Time frame is the setting that's on the chart. Time horizon is how long that potentially could keep us in a trade. So thank you for the questions, gang. As always, thanks for being here for Charts and Coffee. I'm going to hop into the chat rooms here, and I will see you all tomorrow. Same time, same station. Oh, before I go, gang, I realized that for whatever reason, yesterday's charts and coffee did not post at the Simpler Trading YouTube channel. So my apologies for that. We are live every day. So if there is an issue like that again, please just head on over to Raghee Horner at YouTube, and it goes live there as well. So if you want to catch tomorrow's charts, tomorrow's charts and coffee, if you want to catch yesterday's charts and coffee, feel free to check it out at my YouTube channel. Be good to each other, gang. I'll talk with you soon.